Comptrollers and Treasurers, along with the Association of Government Accountants and our colleagues at the Association of Local Government Auditors, I'd like to welcome you to today's webinar on establishing risk management and controls for state government. My name is Kenny Pointer, and I am the Executive Director of NASACT, and I'll be serving as your host for today's event. We're joined today by approximately 1,300 government accountants and auditors and other interested parties from 127 different locations across the United States. Establishing policies and procedures to manage risk has always been part of the public sector landscape. Over the years, a number of professional associations and standard-setting bodies have addressed how public sector organizations can establish policies and internal controls to minimize the risk of financial inaccuracy as well as fraud. For example, the United States Government Accountability Office, or GAO, recently issued standards for internal control in the federal government, the 2014 revision, also known as the Green Book. In the Green Book, GAO adopted the key concepts from the 2013 Committee of the Sponsoring Organizations of the Treadway Commission, also known as COSO, the Internal Control Integrated Framework, and adapted them for the government environment. These standards provide the overall framework for designing, implementing, and operating an effective internal control system. Today's webinar will provide an overview of the national governance, risk, and compliance environment and review how two organizations, the Commonwealth of Virginia and the Pennsylvania Department of the Treasury, have implemented effective risk management processes and internal controls. We're very fortunate to have with us today Keith Johnson, the Director of State and Local Government with Oracle, Bob Sabo, the Executive Director, Public Sector Solutions, also with Oracle, David Von Moll, State Comptroller, Commonwealth of Virginia, and Jeffery Boar, Information Technology Manager, Information Technology Solutions with the Pennsylvania Department of the Treasury. And more information on each of our speakers can be found in their complete bio, which was provided to you in advance of today's webinar. Following the presentation, we will have approximately 20 to 25 minutes for live questions and answers. Today, as we normally do, we are allowing participants to receive audio through either your computer or your phone. And to ask your questions, simply use the raise your hand function of our webinar software. Simply click on the hand icon that's located in the toolbar. And just as a reminder, if you are using a computer today for your audio, to ask your question live, please remember that your computer must have a microphone for that process to work properly. Now, if you prefer, you can send us your questions using the Questions tab located in the webinar toolbar on the right-hand side of your screen. Just simply type your questions in and send those to us, and you can do that throughout today's presentation. Our speakers will be using a PowerPoint presentation, which you should be able to see on your screen now and was provided to you in advance. If you're having any technical problems, please give us a call. Our number here is 859-276-1147. Again, that's 859-276-1147. Before we get started, we do have one final announcement. In order for NASACT to be approved by the National State Boards of Accountancy as a group internet-based provider of CPE, or continuing professional education, we have implemented some attendance monitoring tools for individuals. Now, this applies only to those of you going solo today, participating in the event by yourself, and requesting CPE. If you're not requesting CPE today, you don't need to comply with this. But if you would, I think we have 29 individuals. If you would, at this time, please raise your hand using the function in the toolbar. And keep your hand raised. Our moderator will lower your hand once we have your attendance recorded. And as I said, I think we have about 29. So let's give everybody just a minute or two to comply with that. If you are with a group, you do not need to comply with this test. Your attendance will be confirmed by your room monitor. Now, individuals, we will need to test your attendance throughout the webinar, and obviously we have these internal controls to allow us to better comply with the NASBA rules for granting CPE credits. All right, looks like we have everybody recorded. Thank you very much for complying with that. As you can tell, we have a very full agenda today. I'd like to express my gratitude to all 4 of our speakers for taking time from their busy schedules to be with us today. And with that as a very brief background, let me turn the program over to our speakers. Bob and Keith and David and Jeffrey, welcome to today's webinar. And Keith, I believe you're going first.
Thank you, Kenny, and thank you, NASACT. Most importantly, thanks to each of you for participating today and letting us be a part of your day. I apologize that I'm a little under the weather with this cold. I hope you can hear me okay. But that's the nature of the weather. Unfortunately, we have the internet to not be contagious. I appreciate the opportunity to speak for a few minutes today, kind of at a high level about enterprise risk management and internal controls and how those things are important. Most importantly, in our presentation today will be to hear from a couple of states that are already well down this road and have engaged a lot of people within their organizations to make this a regular practice and habit, and you'll see some of the successes that they have earned and hopefully learn from their experience. Most of you, no doubt, are already familiar with some of the concepts of enterprise risk management and internal controls. This particular slide that's in front of you right now may not be in your previous handouts, but I just want to highlight a couple of the key concepts about enterprise risk management, some of the benefits that will accrue to your organization. Simply stated, it's a methodology used by an enterprise to manage their risk and achieve their goals. As the name applies, it's a risk-based approach to minimizing waste, fraud, and abuse within your organization. It helps to integrate risk management efforts across your organization on an entity-wide basis. Some of those benefits will help you improve your decision-making, improve collaboration amongst the different people that are involved in making decisions for your organization, achieves better alignment of organizational goals with your strategy, and hopefully reduces the risk and therefore the cost of your operations. Most of you, no doubt, are already familiar with COSO. Kenny mentioned a little bit about it, the Committee of Sponsoring Organizations that was created by the Treasury Commission back in the mid-1980s. Just briefly, the Treasury Commission was initially a private sector group that undertook a study of corporate financial reporting practices that were problematic. Out of that study, the COSO organization or committee was created, sponsored by the Institute of Management Accountants, the American Accounting Association, the American Institute of CPAs, the Institute of Internal Auditors, and Financial Executives International. And while the creation of COSO had its roots in corporate financial reporting, the material that they produced has equal and in some cases, I think, more important application in the public sector, if for no other reason than the trust that's placed in us to account for and keep safe the taxpayer funds that are entrusted to our management and oversight. COSO has provided extensive leadership in a number of different business areas. They provided key, what we call integrated frameworks to use both in internal controls and in enterprise risk management. Working together, these really help you build a strong organization. Both of these integrated frameworks are important and give you excellent and helpful guidance. There's a wealth of information on the COSO website. I encourage you to take the time to spend some time on the website and read and research and do your own homework, as it were. Time simply doesn't allow us to go into the level of detail that we could dealing with these concepts. The concept of enterprise risk management is not new by any means. It certainly is receiving a resurgence of thought in both public and private sector organizations. For example, at the recent AGA National Leadership Training event in Washington, D.C. just a couple of weeks ago, there was an outstanding presentation on the current state of ERM and what is transpiring within the federal government to lead and make important changes in adopting better risk management practices. That in turn certainly affects how state and local governments conduct business as well. Within the COSO integrated framework for enterprise risk management, they focus on 4 key objective categories and 8 key components. The key objective categories are first around strategy, which simply focuses on the organization's goals and how you achieve those goals. Secondly, on operations, or how you utilize resources to conduct your business. Third, reporting, both internal and external reporting of the results of your operations. And finally, compliance, or did you conduct your business in compliance with the law? There are 8 framework components First, internal environment, which really centers around how is risk viewed within the organization and how ethical are the people and those kinds of examples within the internal environment of the organization. Secondly, objective setting. Has management set some objectives by which risks can be identified or assigned that may prevent them from achieving those objectives? And are those objectives reasonable? Third, event identification. Have you identified events which either create risk or opportunity? Next, the risk assessment. Are the risks that have been identified been analyzed so that they can either be avoided or minimized or monitored? And then you go through the step of risk response. Are there practices in place to make sure that your risk assessment actually produces action? Namely, are there procedures in place to avoid or minimize or monitor those risks? Next, we focus on control activities. What is the organization doing to ensure that the risk response practices are both effective and are actually being executed? Information and communication is an important component. Is there adequate communication across your organization as well as external to the organization with both the right information that's timely and is presented in a meaningful way? And finally, monitoring. Are there both internal and independent mechanisms for reviewing activity and ensuring that enterprise risk management is an ongoing practice? When combined with the internal control integrated framework, the enterprise risk management framework provides very powerful tools for you to use in evaluating and implementing better management practices within your own organization. Each of these could be considered in their own separate webinar or training exercise, but our intent today is to kind of encourage you to know where you can look for guidance and see some of the real-life tools that people are using out there to automate and streamline that process. Kenny also mentioned the new edition of the Government Accountability Office Green Book. Kind of considered the Bible of the federal government for internal control. It's called the Standards for Internal Control in the Federal Government. But this important document helps you understand how internal controls are managed at the federal level so that you can deal with those important federal and state and local reporting relationships and also obtain ideas and expertise on how to manage your own internal control practices. I would suspect that most of you today are familiar with the Office of Management and Budget OMB Circulars, Circular A123 in particular, which deals with management's responsibility for internal control. That's currently undergoing an update and will be re-released later this year. And Circular A133 that we're all fond of, audits of state, local governments, and nonprofit organizations, which deals with audits of federal fund recipients. There are certainly some other places for you to go to get some expertise. Your own state and local laws are going to be important as you deal with legislators, with key executives, as you deal with auditors, preparers, and users of financial information. All of those folks are going to have an impact on your risk management exercise and your internal control structure as you work to modernize and maintain your risk management practices. I should also point out the influence of the Sarbanes-Oxley Act. While it's not a law that has direct legal applicability to state and local government yet, clearly it has helped drive the renewed focus around internal controls and enterprise risk management. It was produced out of concerns over the failure of corporate financial reporting to properly reflect results of operations, but at times has been discussed as a model for similar requirements from government. Due to similar concerns over timeliness, completeness of financial reporting from government entities, some of the same requirements that are included in the Sarbanes-Oxley Act could potentially be extended to governments at some point. So it behooves all of us to know what it requires and stay engaged in how internal controls and enterprise risk management are handled within our organization. I'm going to turn the microphone over now to my colleague at Oracle, Bob Sabo, who is going to go into some more detail about using IT tools to manage these important risk management and internal control functions. Bob.
Hey, thanks very much, Keith. And like Keith and Kenny, thanks everyone for attending this. It's interesting and important stuff. A little bit of history, though. It's nothing new. I mean, corporations and governments have been dealing with controlling risk for everything from health and safety to fraud for years. So it's a risky world out there. And if you look at the slide there, there's a whole world of risks that we are not going to cover on this particular presentation, but are relatively applicable to everyone. So if you look at things like legal risk and the risk in terms of contract terms, IT risk I'm going to get back to in a second. Operational risk, how's your supply chain and your procurement processes? Are they sufficient to prevent fraud or favoritism? On the workforce risk side, are you at risk with certain employees who might leave at an inopportune time and create either a safety or some other type of hole that would be difficult to fill? So that's kind of generic risk. What I'm going to focus on a little bit more as two major areas is IT risk and financial risk. Because one of the differences in today's environment, most of the risk abatement, identification, and testing in the past has been primarily manual and done through selective audits. Well, what we have today are software applications that work with your systems, not just financial systems, but human resource systems, tax systems, a variety of systems that can help set up plans to mitigate risk and help identify fraudulent transactions. So if you look at things on the IT risk side, right, segregation of duties, we'll talk about that in a second. Segregation of duties has been a basic audit principle for decades, all right? But how do you automate that in a system where you have 2, 5, 10,000 users accessing the same financial system? Okay, disaster recovery is a big risk. How do you guard against losing data, or how do you guard against people accessing data that shouldn't have access to it? On the financial risk side, fraud and transaction errors. How do you know that there are not errors taking place, maybe not as a result of fraud, that are occurring that could be impacting, have a financial or other impact? And then there's our good old friend, waste, fraud, and abuse. How do you know that someone's not accessing the data and using your systems fraudulently for some nefarious purpose? Okay. So on the next slide, you can really group these type of things into three areas. Under business risks, right? You want to have a program that will identify risk, analyze their possible impact, and evaluate their possible impact as well. So that will help you do things like not spending a lot of time or money focusing on things that may not occur very often, or if they do, the impact is small. Okay. So what are your control objectives? That's number 2. Right. So you want to document the risk, right? You want to have a process to assess the risk periodically and even update it as things change. And finally, you have a systematic process where someone in authority can review what these control objections are and update them as they occur. And finally, we'll get more into this in detail later, continuous monitoring, right? So how do you execute controls that let you continuously focus on things that are occurring in your operations, so you can be proactive in identifying these potential threats? And then once you identify them, how are they investigated and mitigated? I took a book a little bit from the GFOA best practices definitions. Keith touched on these a little bit more. But if you're looking at how do you manage risk, it kind of dovetails into what we already said. You have to identify the risk. You have to evaluate the severity and likelihood of the risk. You have to be careful, of course, because some risks that may be very unlikely to occur could have a very catastrophic impact. That's where things like disaster recovery systems don't crash and lose data all the time. It's a rare occasion, but when it does, it's very serious. So that's an example of something that might happen the likelihood is very low, but the impact is very high. Okay. Then how do you treat those risks? What controls do you have in place to mitigate the policies, to mitigate the risk area? And then periodic updates and evaluation. You have to go back in, annually for an annual review, but maybe more thoroughly, less frequently, but to really go in and update and review your past experience, control violations, any new areas that may have arisen in the past as well. Okay, so I'm going to talk about something called advanced controls. I mentioned it before, but the important thing to realize is now you can go beyond paper audits and spot checks and things that were generally done in the past to focus on violations, and we call them advanced controls. Okay, so Access controls are one of them. I mentioned it before with separation of duties. But it also provides things like if you have a database administrator in your organization that has access to everything, well, that's it's a risky position to be in. So there are controls that say, well, listen, this person can only access the master data for human resources but can't touch the financial data, that type of thing. So, and then the other thing is once there is a violation, there is a place and a person that's notified that that has occurred so they can take action. Configuration controls. All our modern systems have configuration options. That's even truer in some of the more modern systems that are very highly configurable, okay, like a human resource, financial, or tax system, for example. All right, so configuration changes could have an impact and lead to either unintended results or even outright fraud. So an example might be payment terms. Someone can go in and change the master payment terms and then go to a vendor record and change that basically to make it more favorable to the vendor or even to basically set up a fraudulent situation. So you can ensure that the configuration controls that the auditors reviewed when you implement your system have not been changed detrimentally. Transaction controls. We're going to hear more about this later from Pennsylvania, but what happens when you have conditions that exist in your system that are suspicious? It may or may not be truly fraudulent, but you definitely want to take a look at it and make sure that it's a proper transaction. Again, Pennsylvania will give you a financial example later on, but an example might be someone who can go into the human resource system and change a pay factor for one pay run and then change it back. Okay. Well, you really should know when a sensitive piece of data like that is known. Things like process controls, things like workflow. Workflow is a very important part of modern systems. Well, there's a process behind that, and you really should know if someone is changing that process and it's not following particularly procedures that were set up in the beginning. And then finally, I'm pretty sure everyone's heard of business intelligence, putting analytic engines on top of data, whether it's in this transaction system or data warehouse. But they're basically analytical tools that let you basically identify patterns, for example. Why is a particular AP operator creating a one-time vendor 10 times in 1 month, when rarely, in general, it happens twice a month? Okay, so things like that. So these dashboards and this intelligence can sit on top of that and be a good guide for analyzing your controls and doing something about it. So if you look back at standard controls, we've had things like three-way match. I mean, basically, we did it on paper, and then we got a computer system that did that or in an automated way. So that was a pretty good start. Audit logs are good, but then somebody has to evaluate the audit logs as, data is captured. Okay. Approval hierarchies, where these transactions properly approved. And these have been done either manually or in modern days in systems for quite a while. But let's talk about what you can do today and move beyond your standard controls into more advanced controls. Okay? So you can look at, I mentioned before, fine-grained user access, the database administrator example. Okay? Not giving them access to the entire system. If they are a privileged user and have access to a lot, well, you want to have special monitoring on what they're looking at and what their activities are. Okay. Duplicate payment detection and prevention. It's not just duplicate payment, but any kind of condition that might make you suspicious of whether that payment is A, either in error, not according to your policies, or B, actually fraudulent. Key risk indicators, KRIs, a little variation on the KPI, key performance indicators. But again, that gets back to the monitoring and business intelligence. You have to set up indicators, like I mentioned the example before, the number of one-time vendors that are typical in a particular payables environment. And if it exceeds that, well, then you're going to want to know about it immediately. You're doing some work with fuzzy logic, so when you have all this information in the system, you can actually set up algorithms to go out and look for certain types of patterns. I'm not going to go through all these in detail, but travel and entertainment policy enforcement, well, that's always a kind of a touchy situation in the public sector because people are suspicious of elected officials, and others not spending wisely on travel. Okay, but you can set up parameters in terms of, is someone violating policies more often than an occasional error would dictate, for example. Okay, and then transaction pattern analysis we talked about. We'll talk a little bit more about that later on. And then configuration snapshots and change management. That's what I mentioned before. If someone changes a key policy parameter that's set up in your human resource or your financial system, for example, it's something someone should know about. It should be monitored, and if it's improper, they should take action. A little bit more detail. So under access controls, I talked about some of these already. Enforcing segregation of duties and access rules. Okay, and then what can you do if this happens? At the bottom, configuration controls. Again, this is kind of a recap of what we already mentioned before. It's important to do this under configuration change tracking. It says continuously monitor changes, and that's a key distinction, because in the past with the sampling approach, for example, yeah, we looked at an audit log once in a while for certain things, and then we looked at a different condition in the audit log, or we looked at different changes in the configuration. Okay. Well, now with segregation of duties and most of these advanced controls, the system is being continuously monitored, and if anything falls outside of your policy parameters, someone is notified about it to take action and review it. Transaction controls. Transaction controls basically look at the basic things that systems do. Accept tax payments from taxpayers. So if someone has been given an unusually long extension, for example, for an overdue tax bill beyond the 90 days or 60 days they might normally be granted, well, someone should know about that. It may be proper, but you never know. Okay. And then the other one is a pattern. Is this occurring on a regular basis or in a particular system or a particular operator or person? Okay. So it's important to do that as well. Okay. I just got a message, I don't know. Okay, and finally, preventive controls, right? So in other words, and a good example, excuse me one second, a good example of a preventive control is, like I said, preventing someone from giving the accounts payable clerk who sets up the vendor record from even creating a vendor record, right? So when you set that up in the system, you can control it at such a level where it actually proactively prevents an improper or risky activity from taking place. So, and then again on the left-hand side of risk intelligence, on top of all those controls is important. Now I have an appendix, and I believe that everyone will be getting this presentation. Is that true, Kenny? Anyway, we'll talk about it later. Okay, yes. So I just have some more details in here, and I'm not going to go through them in greater detail. But but this particular one focuses, for example, on what do we mean by enforcing proper segregation of duties. Okay, and these are good examples. So when you're talking to your users, when you're talking to auditors, when you're looking at setting up controls, these type of things can basically bring it down to a level of detail that even someone who's not in the trenches day to day with this information is important. Okay. So if you look at this one covers segregation of duties. The next one talks about key application setups. This one in particular is something that is very important anytime you are implementing a new system, okay, or changing the configuration because of an upgrade or some other enhancement, or adding new features to a software system, okay. So with this type of information, you can make sure that it's set up properly, and then you can monitor it as you go into the future. We talked about preventive controls, right? I should have mentioned this up front, but we looked at who the stakeholders are, whether it's the audit department, the business end user, or whether it's the IT department, okay? So again, transaction control governor is the last one in the series. You can look at these and find out more information about it as time goes on, because my section's getting close to being over. But So if you look at the final one, transaction controls governor, this is a particularly interesting one because this is, if you look at any public sector organization, from the political officials right down to the managers who are responsible for this, trying to identify fraudulent transactions and mitigating that is such a big issue, not just because of the money involved, but because of, I'll say, the political implications and the embarrassment perhaps and other things that go along with it. So what transaction controls governors can do is proactively monitor the system on a continuous basis for sets of conditions that you believe may be fraudulent. And when it identifies one of those things, it'll let someone know about it. So again, the key distinction from all this is that it'll never be totally automated because there are still audit things that you have to go into the trenches to basically really identify in terms of risk and fraud. But there are tools out there, and in interest of fair disclosure, Oracle is not the only company that offers these tools. But there are tools out there that get you a long way towards this continuous monitoring automation process. Okay? So now we're going to get into a couple real-life examples of managing risk and controls at two of our state government agencies. So I'm going to turn this right. I'm going to take it over to David Von Moll right now, the Comptroller for the Commonwealth of Virginia. David?
Thank you, Bob. I'd like to thank NASACT for the opportunity to share with you a little bit about our risk management internal control practices here in Virginia. We first implemented ARMIX, which stands for Agency Risk Management Internal Control Standards, in 2006. And since then, it has provided a solid foundation for our work with our agencies to strengthen risk management and internal control throughout Virginia. There is some replication in some of this information, but hopefully that'll just serve to reinforce some of these internal control concepts that Keith and Bob covered. Of course, all of these topics are something you could spend many, many hours studying and giving examples on, but we just have a few minutes. So I'd like to first tell you a little bit about my department in the Commonwealth of Virginia, just to give you some perspective about how we operate. My agency's mission is to provide a uniform system of accounting, financial reporting, and internal control adequate to protect and account for the Commonwealth's financial resources while supporting and enhancing recognition of Virginia as the best managed state in the nation. We have a high bar to maintain in Virginia. We've had many years of AAA bond ratings from all three major bond ratings firms, unqualified audit opinion, GFOA Certificate in Excellence in Financial Reporting for 29 years, and we continually have high rankings in terms of the best managed state whenever that happens. So we have a pretty high bar to maintain. Virginia government is also large, diverse, and very decentralized. We're the size of a Fortune 60 company with over 100,000 employees and 50+ billion in annual revenues and expenditures. We have a central financial management system which provides access to the state treasury, but half of our agencies operate agency-based systems that process well over half of our transactions. So these transactions come in through interface, which means we have a pretty wide variation in business processing practices throughout the state. So and also as controller, I have no authority, no direct line authority over agency fiscal offers, although my office issues policy procedures governing financial management. I rely on agency fiscal officers to execute in accordance with policy. So with all this diversity, we needed sound internal control standards that could be applied to a wide variety of circumstances across state government. Now in Virginia, agencies had long been required to develop and maintain a sound internal control framework and a formal program to assess their agency framework. But frankly, they were all over the map in terms of how this was accomplished and even truly whether it was accomplished. Prior to ARMIX, we had no internal control framework or assessment standards. We had no structured accountability, and because there were no standards, there was, we believe, a lot of kind of rubber stamping going on in terms of internal control certifications. And we had no resources, frankly, centrally to have oversight over agency internal control. So even though maybe agencies meant well, they just didn't know what strong internal control meant, what it looked like, or how even to go about implementing it. So we've heard a bit about why internal control is important. Of course, at its core, internal controls are those things that we put in place to alert agencies of any deviations from their plans. It's good government. It helps you meet objectives, preserve public trust, strengthen accountability, promote operational efficiency, improve financial reporting, strengthen compliance, and reduce the risk of loss. Whether we're talking about unintentional mistakes due to the high volumes of transactions or high complexity and time pressures, or even intentional acts such as fraud, of course, strong internal control can reduce risks inherent in government operations. So we needed these standards to essentially proactively address internal control best practices and walk the talk in terms of our assertions that we were the best managed state. This next slide is just to emphasize that our internal control standards were coordinated with our strategic planning process. The top area of this diagram just focuses on strategic planning. The bottom area more focuses on control. It's important to note that coordination between these aspects of agency management is key to fulfilling our fiduciary duty inherent in public trust. For example, you can't just do things right. You have to do the right thing. And this just kind of gives you some ideas of how strategic planning coordinates with internal control. Point here is state government cannot operate only strategically, nor can it operate only to control and eliminate risks. This would be paralyzing to state government. So to maintain the public trust, we have to coordinate strategic and control perspectives. We've talked about COSO a little bit. COSO is the gold standard in terms of internal control frameworks. It's grounded in timeless concepts, and it's recently been updated. And so it's enough to say that it's a good framework in which to develop any internal control standards. In our environment, internal control is also important because of increasing expectations. Our audit environment is increasingly demanding and intolerant. We have an increased risk of adverse audit results because of new standards. Material weaknesses and significant deficiency findings are more numerous and have to be formally reported. We've all experienced things that used to be maybe verbal comments are now more likely to be made to be written into the actual audit report. It's not necessarily a bad thing, but the important thing is to have a structure in place that can give you a chance to avoid these findings and meet these higher expectations. It was important also for us to ensure that agencies understood that agency management cannot rely on the external audit as a control mechanism. This was a significant change in thinking for many in state government. Agencies need an internal control, need strong internal control and proactive risk management as part of their own strategic planning and agency operations, not simply as a response to audit findings. So here are the 5 components of internal control as we've implemented it within ARMIX. The COSO model is somewhat academic on its own, so the challenge is to create a structure that provides reasonable assurance of the integrity of all fiscal processes related to the submission of transactions to the Commonwealth's general ledger, the submission of the additional information required by financial statement directives. This is the so-called ICFR, internal control over financial reporting, compliance with laws and regulations, and of course, stewardship over assets. So we sought to provide a structure and common set of terminology and a roadmap and tools within the COSO structure that agencies could use to evaluate and improve their control environment and control processes. So we set up ARMICS in 3 distinct stages. The agency-level internal control assessment, which was intended to demonstrate the 5 components of internal control were established and functioning. The process and transaction-level internal control assessment, which is a deep dive into the significant fiscal processes, and I'll get into that in a little more detail later. And then, of course, the corrective action plans in which the weaknesses are documented and the plan is set in place to improve. ARMICS also provides control self-assessment tools, questionnaires, and templates, but these were provided only as a starting point because of the uniqueness of agencies. Agencies were to use their judgment to modify these tools to their environment. So the next few slides, I'll briefly go through each component of internal control and what we look for at agencies in terms of their ARMICS implementation. First, we have the control environment, and frankly, in my view, the most important component of internal control. Top management's expectations for how seriously agency employees should view and execute their fiduciary duties. This is the tone at the top, the corporate culture, the formal and informal messages on how seriously employees should regard internal control. This sets the basis for how risk is viewed and addressed by the organization's staff. Management can be a positive or negative influence on internal control. So management has to be definitive and clear, and this message must permeate throughout the agency and reinforce the control philosophy with their everyday actions. So this is a case where actions speak louder than words, but both are important and needed here on a consistent basis. Under ARMICS, we look for agencies to develop and actively promote codes of ethics and to document and assess the key elements of the control environment. The risk management philosophy and risk tolerance standards recognize that some risks are always present, but that risk jeopardizes compliance. Jeopardizes compliance with financial reporting or compliance and legal requirements must be eliminated. Under commitment to competence, we look at whether staff understands agency objectives and how their job contributes to meeting them. Has management ensured each position is filled by individuals with knowledge, skills, and abilities needed to meet their objectives? What are the agency's hiring practices? Is competency the key factor in hiring? Things like that. Oversight structure, we look at whether the chain of command operates effectively, or is it frequently short-circuited? Does the board, if a board exists, does it truly govern? And this relates to the authority and responsibility. And are individuals and teams authorized and encouraged to use initiative to accomplish objectives and solve problems? Has the agency established reporting relationships and authorization procedures? Something difficult within budgetary pressures, but do they assign appropriate and sufficient resources to do each job? All of this will have an effect on the quality of the control environment. So within ARMICS, we provide agency-level assessment tools in which we give examples of codes of ethics, offer questionnaires about the agency's commitment to competence, organizational structure, assignment of authority and responsibility, and human resource standards. Moving on to the second component of internal control, the risk assessment, which is the process of analyzing potential events to determine their impact on the achievement of objectives. We didn't want to replicate work, so ARMICS uses and integrates these strengths, weaknesses, opportunities, and threat analysis that is required to be performed as part of agency strategic planning in Virginia. The SWOT analysis is all about identifying events. Those events can be risks and or opportunities. Of course, risks have a negative impact on operations and require some response. Opportunities should be challenged back to the strategic planning process for agency to act upon. The risk assessment itself evaluates the ranges of probability and impact that identified events could have on reaching objectives. The ARMICS process also provides a structured approach to identify risk responses which include avoiding an activity, reducing an activity, sharing an activity, or accepting an activity. And there's usually some form of cost-benefit analysis that dictates the appropriate risk response. Management's risk tolerance and risk appetite also impacts their risk response. However, we emphasize under ARMIC that management cannot take risks that jeopardize their ability to meet their obligations for financial management and reporting or compliance with laws and regs. In these cases, the normal cost-benefit equation doesn't apply. The example, one thing Bob mentioned was travel regulations, in which some agencies may view that as something that's unimportant and something that they might be willing to risk a high level or accept a high level of risk in. Under ARMIC, this would not be allowed. They cannot just determine that to be a risk they would accept. So in our agency level risk assessment in terms of ARMICs, we look for agencies to conduct and document an agency-wide risk assessment in coordination with the strategic planning process, and to conduct and document risk assessments of significant fiscal processes. And to help them do that, we provide tools and methods for risk assessment and conducting the SWOT analysis. Control activities are policies and procedures that ensure risk responses are completed effectively. They include things like review and oversight, segregation of duties, physical security controls, IT system controls. These are the most commonly understood aspects of internal control. Managers set up control activities to provide assurance that their objectives are met. Specific control activities can help meet strategic objectives, which are program goals, operational objectives that ensure effective and efficient use of resources, reporting objectives, ICFR, essentially internal control over financial reporting to ensure financial statements are accurate and complete, compliance objectives to ensure compliance with laws and regulations, and then stewardship responsibilities, safeguarding assets and preventing fraud. So under ARMICs, we look for agencies to document and assess control activities and assess the operation of their associated control activities. This control assessment should consider all control activities at a high level to ensure none are inadvertently omitted, but minimum requirements allow agencies to focus on significant fiscal processes, which are those programs and activities that either consume a proportionally large share of agency resources, have a high degree of public visibility and fraud vulnerability, represent areas of concern and high risk to mission-critical business processes, and or have a significant effect on general ledger account balances. These are how we define significant under ARMICs. Our agency-level internal control assessment tools that we provide specific questionnaires on accounting administration and general ledger and IT system controls, such as system access, continuity, and segregation of duties. So throughout ARMICs, we provide the standard, but we also try to provide tools that agencies can use to implement it within their agency. The fourth internal control component is information and communication. This is the process of identifying, capturing, communicating relevant information in a form and time frame that enables people to carry out their responsibilities. Of course, everyone needs relevant and timely information to do their job. The important control aspect is that information must be in a form and time frame that enables staff to handle risks, provide services, and carry out their responsibilities. This means information must be effectively communicated to everyone who needs it, and this includes good news or bad news, and information should flow both down and up throughout an organization. An important element with information is what management does with the information. Does management truly want to hear both good and bad news? Do they kill the messenger, so to speak, or are they sending a message that they don't want to hear bad news? Communications breakdowns occur when managers at agencies send mixed messages as to whether they truly want to know about problems and resolve them. Sometimes primary communications channels break down, which leads to the creation of fraud hotlines. So under ARMICs, we require agencies to document and assess how the agency gathers and uses and disseminates information, and our tools focus on an agency's capacity to gather information and how they assign communication responsibilities. The fifth component of internal control is monitoring, which is the process of assessing the presence and functioning of internal controls and making continuous improvements. Of course, it's not enough to assume controls work. Monitoring is necessary either on an ongoing and or periodic basis to ensure controls are functioning as designed. Ongoing monitoring is your routine daily, weekly, monthly review of operating reports, regular status meetings. Management can also carry out monitoring procedures periodically, similar to an internal audit, to directly determine whether planned controls are operating as designed. Of course, an important element of monitoring is to follow up and modify controls or the execution of controls as necessary based on the monitoring results. Under ARMIX, we require agencies to document and assess the effectiveness of their monitoring activities, and we provide tools in which to document the coverage of both ongoing and periodic monitoring and how that monitoring feedback is used to improve internal control. The second stage of ARMIX is the process and transaction level internal control assessment. This is the very specific requirements established to ensure a comprehensive coverage of significant fiscal processes, which, recall, are those processes that consume a large share of the agency's resources, have a high public visibility, are mission critical, or have a significant financial reporting impact. So we require agencies to identify all of their types of financial transaction activity. Since the financial system does not capture all of the financial statement activity, we require the identification of all the activity that doesn't flow through the financial system. And from that, they identify the significant fiscal processes. We require agencies to conduct a specific risk assessment of each significant process. This is the full risk assessment, risk probability, impact, and response. And then we require them to identify the control activities for all the significant fiscal processes. This is identification of things such as who authorizes things, how things are verified and reconciled, and so forth. And finally, we require testing through specific inquiry or observation of personnel performing the control. And of course, this has to be documented. Our ARMIX transaction level internal control assessment tools focus on all facets of financial reporting. We provide questionnaires on appropriations, cash receipts, disbursements, accounts receivable, federal grants management, internal indirect cost, system security, fixed assets, just to name a few. So this is a pretty comprehensive review of all fiscal processes. The last stage of ARMIX is the corrective action plans. Since no one's perfect, corrective action plans are an important indicator of how effectively ARMIX has been implemented. This is just the process of identifying weaknesses, targeting a date in which corrective action is going to be completed, identifying who's responsible, and so forth. So in terms of ARMIX oversight, which is something we've been fortunate enough to establish, got the resources to go out and look at how agencies have responded and how they continue to respond to these requirements over the years. We did have a largely good response to ARMIX by agencies, and we continue to try to improve, maintain, and improve the structure. The experience, of course, the experience and education of fiscal staffs fluctuates widely. It's getting more and more difficult to maintain a professional workforce in state government. So this requires constant vigilance. Things can go out of get worse in a hurry if we don't maintain some oversight over this process. We have chronic understaffing, given volume and complexity of fiscal business processes due to budget pressures, and the emphasis on internal control by top management varies as management changes. and of course the documentation requirements always place a burden on agencies. So we do perform a statewide agency risk assessment that looks at agency size and complexity, the time since their last ARMIX review, the issues on their financial reporting attachments that they submit to us, and of course auditor findings. And we actually go out to agencies on site and conduct quality assurance and ARMIX reviews that focus on, we really take a focus on assistance and suggestions, not on reporting weaknesses or failures. It's supposed to be a collaborative process, and we try not to get it to be too confrontational with agencies. We're trying to help them improve the process. So the focus is on documentation of demonstrated completion. They can't just have thought about these concepts. They had to have documented how they went about it and what it resulted in. So we look for agency-level controls, documentation on how the agency assessed risk, who was surveyed, how were they surveyed, get copies of the assessments and the SWOT analyses. And then for the transaction-level assessment, we look to see that they've put together a list of all significant fiscal processes, how was the list developed, and the identification of the key controls. Of course, we look for the documentation of test results and the corrective action work plan. In these reviews, the top problem we find is lack of documentation. We also encounter failures to effectively identify and test agency-level or significant fiscal process controls and weak or no risk assessments. So it's just a constant process of working with agencies to improve the process, and we'll continue to do that as we go forward. With that, I'm going to swing it back over to Kenny.
Thank you very much, David, and congratulations on your good work there in the Commonwealth of Virginia. David, if you will advance it one more slide for me, actually a couple more. We do need to do, thank you. We need to do another attendance check, and again, this is just for individuals and only for those that need CPE today. Same test as before. If you would raise your hand using that function in the toolbar, and keep your hand raised until our moderator lowers that for you and we record your attendance. We've got about 29 individuals today, so we'll give everybody just a second to comply with that. As a reminder, while we're waiting, regarding questions, you can go ahead and send your questions in to us. You can type those in using the questions tab, also located in the webinar toolbar on the right-hand side of your screen. So if you have questions for Keith or Bob or David so far, go ahead and send those to us, and we'll get those in the queue for you. All right, I think we have everybody's attendance recorded. Let's now turn it over to Jeff Boar, and Jeff's going to talk about some of the work that they've done in the Pennsylvania Department of the Treasury. Jeff, welcome.
Oh, thank you, Kenny. Thanks for the introduction. I'd also like to thank the NASACT for giving me the opportunity to present today. So I'm going to talk about the way we implemented advanced controls utilizing Oracle's GRC product, which stands for Governance, Risk, and Compliance. I'm the manager of application delivery and ERP support at the Pennsylvania Treasury, so I'll talk about this. I'll try to stay more on the accounting focus than the IT focus. Just to give you a quick overview of what the Pennsylvania Treasury purpose is, the number one task we do is we process payments for the entire Commonwealth. Essentially, the Commonwealth is a hub and spoke system where all the other agencies send us vouchers really for payments to be dispersed. So those come in through a variety of methods, through services and files being sent to us as interfaces, and also some users directly key them in. So last fiscal year, we processed about 30 million payments worth nearly $75 billion. Our IT systems also manage about $15 billion in state assets in terms of investments and banking accounts. We administer an unclaimed property system, which has generated $148 million in general fund revenue for our Commonwealth. We administer the Commonwealth's PA 529 TAP tuition assistance account. And then what I'm really here to talk to you about is that how we prevent fraud Essentially, when payments come into us, everything needs to be pre-audited before we move it forward through a state statute and through our business practices. And in fiscal year 2012, 2013, we prevented $58 million in fraudulent and erroneous payments through pre-transactional audits. So when we were going through our process, which, just to give you a background of what I'm going to talk about, is we implemented a rehosting project, an IT infrastructure project, redoing the whole business process in Treasury, moving from custom systems, mainframe-based systems, to a modern ERP system based on PeopleSoft. And part of that goal was to increase our pre-audit coverage to 100%, so we always know that everything's been checked, at least automated checks were going in place that our CPAs and auditors think are the most high value. And to do this, we chose the Oracle GRC product. So how did we get to that? First of all, as I said, our responsibility is prepayment audit. Our goal is really to have 0% fraudulent and erroneous payments generated from our vouchers. So to accomplish that, we obviously need to scan and check every voucher that comes in the system. So we saw the Oracle GRC product as the tool we could move from where it was traditionally used. The module we used was for post-payment audit, really after the payment's been done by auditors who are looking at it, and move it to our pre-audit section who would look at these as vouchers before they become payments, before we move them forward from a voucher to payment generation. And the module in GRC we use is TCG, which stands for Transaction Control Governor, which Bob had up on a slide real briefly earlier. So what were some of the business challenges that led us to this decision to use this product? We wanted a standards-based solution that was compliant with both accounting standards, auditing standards, and IT standards. And we needed to have that 100% pre-audit support. As I mentioned, that was really the top executive goal for what we were doing with the pre-audit section, which in Pennsylvania Treasury is known as the Bureau of Fiscal Review. All of our rules needed to be compliant with Pennsylvania's management directives, laws, and statutes. Another very key role in this was we wanted all of our control logic to be placed in the hands of our users, which is our audit staff, our pre-audit staff, and fiscal review. So basically our assistant director of fiscal review, who's a CPA, he led that team and led that effort, and they built the logic. It wasn't put in the hands of developers. They weren't just writing details. The actual control logic in the GRC was all designed by CPAs, so they have control over that. They're able to modify that as they find new issues or need to publish new controls to move forward. So that was very important to us. We needed the ability to analyze vouchers from multiple sources because, as I mentioned, we have vouchers coming in from many different agencies. A voucher coming in from the Liquor Control Board in Pennsylvania might not look the same as a voucher coming from the state employees retirement system, for example. And really, we needed a big data analytics capabilities, and that's kind of a buzzword in the industry right now. But really what that means is we needed to be able to take one voucher and compare it to hundreds of thousands or millions of other vouchers before it moved forward. And really, we're doing this in mass, so in reality, we're taking hundreds of thousands of vouchers and comparing it to millions of vouchers every day. So, and payments. Some vouchers are being compared to payments as well. So that's where big data analytics comes into place. Some of the technical challenges that we had was this was part of an overall project to implement a PeopleSoft ERP financial system, and that comes with its whole set of difficulties, such as business process reengineering, getting everybody into a common system, getting them out of their silos. So we had the whole project management of an ERP system, and this was part of the project. So we implemented really PeopleSoft and Oracle GRC simultaneously. From a technical standpoint, we needed to be able to hit multiple types of databases. So in this example, we had to hit SQL Server as well as Oracle. GRC is running on Oracle, or PeopleSoft's running on SQL Server. We needed to be able to analyze custom data structures as well as delivered data structures, which means basically parts of PeopleSoft we had to customize to be specific to Pennsylvania's requirements. So we needed to make sure that that we had a solution that was able to do both the custom and the delivered. And we needed to scale to very large data sets. Like I said, we needed big data analytics. So on some days in the each month we have hundreds of thousands of new vouchers being loaded into the system, and we need to be able to compare that up to 3 years of historical vouchers. Just to give you some idea, when we brought the PeopleSoft system live, we had 20 million historical legacy vouchers converted for this comparison. We project within 3 years we'll have over 70 million vouchers really in that table, and we needed a solution that was able to make that type of comparison, compare every day hundreds of thousands of vouchers to millions of vouchers, tens of millions. And that's what led us to the Oracle GRC. So I'm going to talk about how we got about to getting this from a concept into production. The first thing we did, because we didn't have PeopleSoft active yet, was we set up our GRC transaction control instance and ran that as a pilot project against our legacy system. So we did this to get our users familiar with the system. It also allowed us to validate that it worked with all the technologies we wanted it to work with. It also brought up our capabilities with it, and we were able to see how we could use it. Now, in this phase, we were really using it on more of a post-audit and looking at problems instead of putting it into the workflow like I'm going to talk about later. Because that project was successful, we integrated it into our PeopleSoft ERP project. So that was really had 3 legs to that part of the project. The first part was the pre-audit staff, which was really led by our fiscal review assistant director. They would build out the controls. Basically, in Oracle GRC, you have 2 types of ways you run your analysis. There's models, which you run one time, essentially like a query to just go look at something, and then controls, which are run on a continuous basis to allow you to stop fraud that you've identified, potential fraud, and you keep on checking that. That way, once you know that here's a data pattern you see sometimes, you keep running that to make sure it doesn't happen in the future. Now, to support them, our technical staff built some custom business objects inside the GRC product, and this is really how the audit staff maps their data back to PeopleSoft. And the reason for this is that's like the technical component. When the audit staff's working with it, it's all through a graphical user interface on a web page. Technical staff's building it with some XML type files on the back end. And then finally, because the GRC was first designed as a post-audit product, it doesn't modify the data in the source database, so we needed to code on our own some interfaces that would update PeopleSoft with the incident information, because we want to stop anything that's been identified until it's been manually reviewed by our audit staff, which I'll talk about that in a minute as well. So we went live with this solution in PeopleSoft on 7/1/2014. So we implemented a statewide PeopleSoft implementation for accounts payable and our Oracle GRC solution at the same time. So every payment that's gone through, every voucher that's gone through PeopleSoft has also gone through GRC. So I'm going to talk real quick about the architecture of our pilot project. Essentially, our old legacy system used a couple of different environments to load it into the mainframe, and it first went through a database system. And we had payments coming in from various legacy systems. One of our partners uses SAP, another one uses Oracle E-Business Suite. All that loads in. Those vouchers looked a little bit different depending on what they were. In fact, the old system didn't even have the concept of a voucher exactly. It's more of a payment request in the old custom system. Our GRC instance, which was on an older version, would sweep through that each night. We would sweep through a clone of the database because we wanted to make sure we wouldn't have performance problems, which we found we don't have any problems with the GRC causing other processes in our payment processing system to fail. And then our fiscal review users, they would use that data and they would look at it, and they did find some savings in it. I don't have the stats on that, but they were able to go back and determine the savings, find savings, because they did find fraud with some of the controls they built on that. So they were very happy with it. We were happy on the technical side with the performance. So we moved forward to our current architecture, which has even more custom payment systems sending into our PeopleSoft system. They send vouchers into us over many different ways of interfacing with us. And then also we have users who enter directly into accounts payable, both inside of Treasury and outside of Treasury. So we have all these vouchers. There's some days where we have 500,000 vouchers coming into our system. So we have a very large volume. And And essentially what happens there is it gets stored in the database. Controls and models built by our audit staff runs against that database, and it looks for anomalies. And if there is a problem based on one of the controls defined, it generates an incident. That incident comes back to the FR pre-audit users who see in the middle, who they review the incident, and then they either move it forward or send it back. So either it goes to AP afterwards, or it gets sent back to the source and says, hey, this payment can't be made because of these reasons. So this slide shows, just a basic workflow diagram of what we do. So as I said, the vouchers are built in PeopleSoft, anywhere from 10,000 in a day to 500,000. We execute GRC analysis against these. After all the analysis runs, all the various controls, we generate incidents. If an incident is generated, it goes for manual review by a pre-auditor, like a fiscal examiner, and they'll determine if the payment was valid or not. If it was valid, they just let it go forward to accounts payable for processing. It goes through budget checking and the typical types of accounts payable processing that you see. If they do find that it was in error, they'll record what was wrong with it, and then they'll essentially fill out workflow will send it back to the originator so that they can see why it was rejected and remediate in their system. Here's just a quick screenshot of what we did inside of PeopleSoft. There's a couple differences in the way we wanted to present the data than the way the GRC presents it. First major difference is any incident, we wanted it to come back into the voucher and stop its approval from moving forward until it's been manually reviewed. So it flips the status whenever that happens. If it's not identified, we flip it to another status so it can move into AP. In this case, then, another thing we do, which makes a different way of visualizing the data, is if there's multiple incidents for the same voucher, like in this case, it was identified as a duplicate payment. This is in our test system. And invoice sequence anomaly. So both of those controls triggered on it, incidents on it. So instead of the auditors seeing two different incidents, which potentially could be assigned to different auditors, we put it on a single voucher, associated that, and then they would review based on this. They would have a checklist. We have an automated workflow that gives them a checklist of things they should check based on which types of incidents are on there, as well as a general checklist for common audit checks they always do whenever there's an incident. And that's really how we integrated this into PeopleSoft. So our end users really only interface with PeopleSoft. It's only the audit staff that designs controls that directly interface with the GRC, and this made it easier for training, and also made it easier for us to put our own custom workflow around it that was specific to Pennsylvania Treasury. So a couple examples of controls that we run are like the first payment for new purchase order or contract. We have a control in there for duplicate vouchers, a very important one for us because we have so many different systems sending to us, and there's so many different payables clerks out there in the Commonwealth. It's very easy to have duplicates come, and that one's one of our bigger issues. Resubmitted payments, incorrect address, invoice with similar sequence. Resubmitted payments, that's essentially if a payment's been delivered, if a payment's been rejected in the past, a voucher, and then that same payment's come back in, we identify that and send it over so that they can see if they made some changes to it that make it now valid, or if it's still invalid. There's obviously a higher risk of problems with these because they've already been rejected. So those are some types of controls we've put in place for this. So I'm going to talk about what's worked really well for us with the GRC. One of the things was because it was easy for us to implement, we were able to deliver this project on time and under budget. We received an innovation award from Pennsylvania's Office of Administration for this, for having the most innovative product in the state, or project in the state last year. And what worked really well with this was we have 100% audit coverage. That's really the main goal that we had, as I said before. Every voucher that comes in the door is going through audit, at least automated, and then that gives us more peace of mind that there isn't issues. And as time goes by, we're able to implement more controls. We'll have more checks that are run against every voucher that comes into our system. A pre-audit consistency, because every voucher has every control run against it, is taken care of. We're able to scale to very large volumes of data. We haven't had real issue with performance on the GRC side, even with our volume. Our users have taken control of logic. No developer has ever written any of the control logic. It was all written by audit staff, mainly during the project, but they've been starting to write some more. We've integrated into our workflow very easily. It worked very nicely with accounts payable processing and PeopleSoft. We were able to integrate that as part of our project with relatively simple customizations and bolt-ons. And the technical operations of this product were pretty good for us because it sits on top of standards-based software. So it's sitting on top of Linux, Oracle Database, Oracle WebLogic. Only the GRC software is really something that our users, our IT staff, didn't know already. One thing that didn't work for us so well was random sampling. That was the way we identified vouchers in the old system, and then our audit staff still needed that. The GRC is more made for control-based auditing, so we had to add a simple bolt-on code for that, and we were able to accomplish random sampling through that method. Just some quick stats on what we've done. We've scanned over 7.7 million new vouchers since we went live. That's because, and I know you're saying that we have over 20 million a year and we're over halfway through, but towards the end of the fiscal year, which our fiscal year ends June 30th, we get more vouchers. So that's why it's not evenly distributed. Tax returns and stuff like that really shoot up the voucher volume. Right now we only have 6 controls active because we're trying to phase in our the controls because we have a constant push-pull relationship between accounts payable trying to process as quickly as possible and audit trying to look at as much as possible. And since we had a new ERP project, even though eventually the ERP gives you much higher efficiencies, there is a scale-up time, and to get everything hammered out and have our users fully trained and working at peak efficiency, we needed to phase in our controls. So we're going to phase in another 20 over the next couple months, giving us about 26. Probably by the end of next year, we'll have over 40 controls in place. So in the future, we're going to use the GRC to expand to more controls, as I said. We're also going to expand beyond AP transactions. We're also going to start moving it into our general ledger transactions for areas of risk there. Obviously, the AP was a higher priority than the ledger. We want to build out analytics for management, executive dashboards and such based off of what we're getting out of the GRC. We want to use this further to help agencies identify problems so that they don't even send us over ones that are erroneous. And we need to refine controls over time. Finally, the last thing we're going to do is we're going to eventually adopt Access Controls Governor to check user entitlements, and we're going to adopt Configuration Control Governor to make sure our configurations changes are meeting our audit requirements that we have, because the Treasury is audited by the Auditor General in Pennsylvania. And with that, I'm going to move it back to Kenny.
Thank you, Jeff. Excellent presentation. Congratulations to you for the fine work you've done in Pennsylvania as well. We are at the allotted time for our questions and answers period. We've got about 25 minutes actually for Q&A. I just want to remind everybody that you can come on and ask your questions live if you'd like to. Simply use the raise your hand function of our webinar software and click on that hand icon that's located in the toolbar, and then we will call upon you to ask your question. Again, just if you're using your computer for your audio today, you must have a microphone for that process to work properly. Most of you will want to just send your questions in, type them in. You can do that as well. Some of you have already started. Just use the questions tab that's located also in the webinar toolbar on the right-hand side of your screen. So let's start. And let me just start out with some general questions while our questions queue builds up a little bit from the participants. And I'll just pose this to all speakers. These are some generic type questions. But Bob and Keith, let's start with you and kind of what you see on the national scene with your clients, your Oracle clients. But what do you think are the biggest risk exposure areas for your financial systems, or at least those of your clients? You know, is it fraud? Is it errors? Is it employee misconduct? Do you see some common themes? And Keith, why don't we start with you? We'll just go down the order of the speakers, Keith, and then Bob, and then David, and then lastly Jeff.
Okay, thank you, Kenny. I would say that it's a complicated answer in a sense, in that as Bob talked about during his part of the presentation, there are things that are risks that may not likely happen, but when they do happen, they're catastrophic, as opposed to those things which happen on a regular basis. So I would say common risk has to do with probably errors more than it does fraud or employee misconduct, simply because I think we generally tend to have honest, ethical people who are trying to do a good job, but because of a number of different factors, it could be complexity of the transaction, it could be the fact that we're dealing in multiple data systems, information is coming from a number of different sources, complex paper-based transactions that are trying to work with automated systems. The complexity of the environment in which we work leads to opportunities to make honest mistakes. So I think those are probably a much more common face and try to address. That said, I think the higher risk in terms of damage to the organization, whether it be dollars lost, damage to our credibility, risk to our constituents, those would probably come from fraud and employee misconduct types of circumstances. So in short, I think the answer is both, but the reality is it's probably likely to happen with an employee, or excuse me, with an error, and maybe a greater risk of loss, fraud, and employee misconduct. Errors can typically be fixed. Fraud, those kinds of things may not be as easily. Bob?
All right.
Oh, yeah, I totally echo what Keith said. The only thing I would add is that errors tend to be repetitive, and you can, if you can analyze it, you can basically say, well, why is this mistake always being made, and fix it, whereas fraud tends to be, something more devious and hidden, harder to detect, that type of thing. But what Keith said is exactly true.
All right, thanks, Bob. Keith, by the way, we're getting a little echo on your audio. I don't know if you have it on the speaker or just what, but you might try the handset. Just a little echoing there. David, what about you? When you rolled out ARMIX, or the Commonwealth of Virginia, what did you guys see as your biggest risk exposure areas?
Well, I agree with Keith and Bob that most of the higher level of risks relate to the opportunities with errors, and related primarily just to large workloads and understaffing rather than misconduct. I think, and it's gotten, I believe, worse, which is all the more reason why we need these internal control structures to have early warning systems in place, because the experience and education of fiscal staffs has I think, changed over the years. It's becoming more difficult to attract folks to state government, and it's going to be a serious issue when we get into succession planning with mid and high level management in agencies. So it's really just an area that requires attention, but I don't know that it's gotten enough attention in terms of the risk associated with retirements that are going to be happening in state government over the next. Kenny?
Yeah, I'm sorry. Jeff, how about you in the Commonwealth of Pennsylvania when you guys rolled out your GRC? Any particular big risk exposure areas?
Yeah, so when we rolled out our GRC product, it was with a brand new ERP implementation. So a lot of our risk came from training and from many different systems integrating with it. So it was mainly by mistakes. There were some keying issues early, not a lot, but a few by users because they didn't quite understand. And then obviously there was many different systems we were interfacing with, so there was a few technology glitches that were coming in there. So early on, we was really echoing what David and Bob said, that it was, errors really. It wasn't really fraudulent. that was our largest problem early on at least.
All right, thank you. And I know we're getting a little echoing in the Q&A. We're trying to work on that. I apologize. Let's stay on risk for just a second, and then we'll go to the questions in the queue. But a number of you, and I know, David, you talked about this, tone at the top, and that's really one of the most important internal control components. But talk about how you ingrain risk management practices in the culture of your organization. It kind of gets to this tone at the top notion that David and others mentioned. Let's go in the same order. Keith, how do you see it, your clients at Oracle, how do you instill and ingrain risk management practices throughout the culture?
Great question, Kenny. I think, like anything in government, it comes down to a function of leadership and making sure that those executives who are responsible for the negative of a risk or a problem understand the nature of the risks that they're taking and doing what they can to prevent damage to the organization. In government, typically, it's a political question to some degree. We're politicians that want to get reelected. Credibility becomes everything. So nobody wants to. I and many others have worked on situations in the past where a scandal has occurred. Security has been breached, money has been stolen or misinvested or misspent, whatever the circumstance may be. There's nothing like a crisis to kind of focus that spotlight on a problem and energizing people to fix it. It's a little more difficult to get people to focus on it when, in fact, no crisis has occurred. But real leadership recognizes everybody is vulnerable, nobody is perfect, and no system is perfect, and it requires that strong leadership and that voice from the top to ingrain that within the culture of the organization, that internal controls matter and that ultimately your credibility is at stake.
Thank you. Bob, anything else you want to add to that?
No, I just want to echo what David emphasized. I mean, I think it's got to be a process that becomes institutionalized, just like an audit is and financial reporting is. Pretty much it.
David, you mentioned it first, tone at the top, and we all, I think all of us here on the call today would agree that's critical. How did you go about that in the Commonwealth of Virginia when you rolled out ARMIX?
Well, I tried to tie it in with the strategic planning process, which although some people are resistant to the structure associated with it, I think everyone can agree with the merits of strategic planning. So I think when you tie the risk analysis process to achieving objectives and operating efficiently, with the budgetary pressures that our agencies are facing, I think that's a message that that it's a tie-in that is easy to make, and I always try to remind folks that if you don't have good controls, then you appear to be sloppy, and if you appear to be sloppy, it can be viewed as fraud. So it's kind of a something you want to nip it in the bud early, and then it can avoid spinning out kind of out of control and being viewed as a severe problem. So tying it to achieving objectives and operating efficiently is something I think everyone can understand.
Yeah, excellent. Jeff, what about in Pennsylvania?
So for us, I mean, since we were implementing a new project, as I said, product, one of the big things was getting stakeholder buy-in, getting everybody outside of working in silos and everybody, both internal and external to Treasury, who are our key stakeholders, to agree that having fraudulent payments come out is really everybody's goal, is to stop that. So we're trying to identify them early, and they're going to try and stop them from ever happening. Prevention. That was really the key to it. A couple minor crises, like Keith mentioned, really helped to hammer that home then once we went live.
All right, very good. Let's go to our audience. We've got a few questions in the queue here. And let me just start right at the top. David, the first one's for you, and you just mentioned this, tying to the overall strategic plan. the question is, would you be able to provide an example of how you tied the risk related to internal control to the overall strategic plan? And David, that question's for you.
Yeah, I'm not sure I understand the question in terms of a specific example within a specific agency.
Yeah, well, you mentioned tying the internal controls to the overall strategic plan, and I think they were just looking for maybe an example of how you went about that.
Well, specifically the SWOT analysis. I mean, a SWOT analysis is a specific requirement of both ARMICS and the strategic planning process. So it's fundamental to strategic planning to understand what the strengths and weaknesses of the organization are, and also in order to set objectives to understand what the opportunities and threats are. And that's also key to internal control. So there's a direct tie-in to me between those two elements, which is, I mean, early on we didn't want to replicate things, and since it was so key to the strategic planning process, and it was obvious that it was a key part of the COSO model, we tied that the SWOT analysis in and allowed it to be essentially just done once for both purposes.
Yeah, okay, excellent. Thank you. David, I'm going to stay with you. Question is, how many staff does Virginia have dedicated to ARMICS oversight, and do you think this is sufficient?
We have a full-time devoted to these quality assurance reviews, 4 or 5 staff. Of course, it's not sufficient. You would like to have more than that, but I'm so grateful to have gotten the budget to support what we have. We would like to be able to get around to more agencies more frequently. Certainly, there's a lot of good that can be done from being proactive out there and giving agencies information on how to go about their ARMICS responsibilities. So with 230 agencies, we could double that easily and keep them all busy. But we have to prioritize, and based on our risk model, we feel like we're getting pretty good coverage and avoiding a lot of problems that we'd otherwise have if we didn't have that staff.
Jeff, same question for you. How many people did you have to implement the GRC process?
Well, for implementing the GRC process, really we had about three people who designed controls looked at that. So it was led by our Assistant Director of Fiscal Review, who's a CPA and an established auditor for 20 years. And then on the technology side, we had another core team of maybe 4 people, but none of us were working full-time just on that because it was part of the PeopleSoft project. So that's what we looked at for implementing the GRC.
All right, very good. I'm going to stay with you, Jeff. And I think I heard you mention some numbers, but the question is, how many vouchers are entered into PeopleSoft? And as a follow-up to that, do you receive paper invoices, or do you just use a product to scan them and interface with PeopleSoft? So really 2 questions there.
Okay, so the vast majority of our vouchers that come into PeopleSoft are interfaced actually from various other systems housed at other state agencies. So the majority of those are coming in either from, say, SAP or from Oracle eBusiness Suite or another PeopleSoft instance that a different state agency runs. It's really where most of our vouchers come in. That's 90%. And then about 10% are keyed in to our system directly. So the overall volume, as I said, we expect about $30 million a year overall, 20 to 30 million a year. It's not evenly distributed. So there's some days where, like, a retirement board sends us a group of 200,000 vouchers all in one batch. And there was a day this week I know where we had over 385,000 vouchers load in on a single day. Other days we might only have 5,000. So it kind of varies based on what payment programs are really going. We do have images scanned in for some of our invoices and POs, but not Not necessarily everything. Some of it we go and look at it in our audit staff has access to go look at it in the originating system if it's an interface payment. If not, yes, it's scanned in and it's also keyed. We don't have, we aren't right now implementing any type of, I can't think of the name of the software, but software that scans it and auto populates it in the database.
Yeah, very good. Boy, I tell you, when you have that kind of volume, you better make sure you have good internal controls. Jeff, I'm going to stay with you. The question is, what percentage of vouchers are returned or rejected for manual review, and how many pre-audit staff do you have?
Well, I don't have the exact number. I didn't stat that recently. How many are actually returned for review based on the controls? But the pre-audit staff, the bureau that supports that has approximately 50 in it, but not all. If you get rid of administrative staff and stuff, it's about 40 people who review those that are come back as incidents. They also are looking at random samples, and they have other audit criteria too. So it's about 40 users who deal with that, auditors and their managers. And then, but in terms of the percent that come back, it varies too based on source systems. Some of these mature processes, like say an annuitant payroll, it's very rare that's picks up anything because there isn't too much room for error in that they haven't changed. While some of the newer payment programs could come back occasionally and identify maybe even 10% of what they send in, but they aren't sending at that large a volume. It's tough for me to put a number on it though because I don't have that in front of me.
That's no problem. Bob, you may have had a comment about scanning. You want to jump in here?
Yeah, it's not really related to risk, but throughout our entire customer base, and I worked only with state and local customers, we're just seeing tremendous activity on people having projects and RFPs and looking to have RFPs to streamline the whole invoice entry process, everything from scanning to electronic invoicing from their large vendors. So it's definitely something that's a trend out there now.
All right, thank you. David, back to you, and I suspect this is a question a lot of people have on their mind since we do have a combination of controllers and state auditors on the line with us today, but how does ARMIX work with the state auditor reporting and assessing internal controls and their risk for agency and statewide audits?
Well, we do use their findings as input in terms of which agencies demand our most immediate attention. As I mentioned, our reviews, we try to be a kind of collaborative learning process with agencies. But in some cases, we do put our findings in writing and make recommendations. Of course, the auditor is always interested in finding those reports and reviewing them. Which we're glad to share the information with them. But it does set up kind of an environment where we want to be collaborative with the agency and have it be a learning process. And so we want to establish a level of trust with the agency so that they will learn from us and we can learn from them. And sometimes they don't want the auditor to maybe don't want them to know about that. So. We are trying to formalize the process a little more in terms of issuing reports and sharing that with the auditor. But it is, at the end of the day, it's got to be a collaborative process. So we each have our role. We want to work with the agency. Even the auditor wants to work with the agency. But it's sort of a working process.
Yeah, and the overall goal is to improve internal controls, whether it's from ARMIX or the work of the state auditor. So it is a collaborative process.
Right.
Jeff, I think maybe the same question could apply to you in Pennsylvania. How did your work with the GRC interrelate and integrate with the work of the state auditor?
Well, the state auditor is, like I said, it's a separate agency in Pennsylvania. We did have an auditor attached to us who was reviewing what we were doing during that implementation, and I kind of forgot to mention him when you asked who else, what was the size of our team. But he reviewed controls and gave us some input as to what they're looking for when they're reviewing really our operations. And that's where we were. They were integrated with our project some to some degree. And you know, I'm not quite the person to talk about necessarily all the integrations between Treasury and Auditor General. So.
Yeah, that's fine. Thank you. Jeff, I will stay with you. You know, you talked about the SAP just a little bit, and this question kind of goes to the relationship or the integration between data that was in SAP and your system, which is an Oracle system. Can you talk about some of the challenges there, or were there challenges there?
Right, there were some challenges. I mean, I'd say they were more on the, you know, on the just the business process side more than the technology side, because technology we basically came to a common standard pretty quick with XML. But what we needed to get we needed to come to an agreement on what they were going to send to us, what they had available, because the data structures of payables aren't necessarily the same in the two environments. So we had to have a series of meetings really when we were implementing this project, because that's actually that's our largest customer. Customer agency is using SAP, and another one of them uses SAP as well. So we had to come to an agreement. We had to meet with them repeatedly to see how we could get the data structures between PeopleSoft and SAP to work together. So there were some challenges there, but it was mainly worked out by just having meetings and determining the meetings from our side, from our Comptroller staff, and from our audit staff with the Office of the Budget generally, and we worked it out in Pennsylvania.
Very good. Let me stay with you, Jeff. The question is, how is the address, the mailing address, verified in the GRC system?
Well, actually, mailing addresses we don't validate in GRC. We have a separate product for that we've used for the last 10 years that updates our mailing addresses and validates based off of post office records. So we don't use it for that purpose.
Okay. David, let me come back to you. The role of the internal auditor. What is the role of the internal auditor in ARMICS in entity-wide risk assessments?
Well, we encourage agencies to have internal auditors. Unfortunately, the amount of resources devoted to internal auditing has gone down over the years. But where it exists, agencies can use the internal auditor's analyses in the assessment. But the point we emphasize is that can't substitute for management's work. So use the results of their reviews, but it doesn't relieve management from the responsibility of conducting its not only establishing the structure, but doing its monitoring activities.
Yeah, and does Virginia have any statutes that require an internal auditor in certain agencies?
In certain agencies, yes, although a few years ago that was consolidated within the Department of Inspector General. Some of the resources in that agency are specifically devoted to agencies such as mental health and corrections, but it is not widely required by statute.
All right. Let me ask Jeff and David one question, and that is, in the case of Virginia, ARMICS, and in the case of Pennsylvania, the GRC, has it led to any cost savings from better risk mitigation and prevention when compared to those processes that were in place previously? Jeff, why don't you take it first, and then David.
Yeah, we have cost savings that were identified based off of GRC audits that picked up additional incidents. Some of our savings come from random sampling, some comes from the GRC. We did identify savings. I don't have those numbers in front of me right now either, but we did identify savings that came in from it. Some of the vouchers, also get picked up by both the random and the GRC. As we implement more controls, we're expecting it to go up significantly, our savings amount.
Yeah, and I know it's difficult to quantify these savings, particularly when we're talking about internal controls. But Jeff, one of your bullets on one of the slides was providing 100% audit coverage on vouchers. I mean, while you can't maybe quantify that, that certainly is a much better internal control environment.
Right. Yeah, and that means as soon as we identify some type of pattern, we can make sure it doesn't occur again. So even if it's something we didn't think of initially, we can put that in and make sure it doesn't come back through our system. With the type of volume we have, we need that 100%. We need software to support it, because without technology, we wouldn't be able to get that 100% audit. It would take way more than 40 people to audit that type of volume.
Yeah, excellent. David, have you guys been able to measure any cost savings from better risk mitigation or prevention compared to your previous systems?
We have not studied that or surveyed agencies for that information. I think this is about reducing risk and getting us to a point where we can sleep at night. Frankly, before I had this structure in place, I got a lot of certifications of internal control, but I don't know how much backing there was to them. So although I'm sure there are through the analysis of risks that's gone on within agencies, there's probably been some identification of redundant controls and cost savings. We have not formally studied and documented that.
Yeah. David, real quick with you, how often should agencies complete the agency level internal control assessment? Is that an annual event, or how often?
The agency level assessment, it's not required that it be done annually. We ask agencies to look at their own circumstances. If agencies' upper management hasn't changed a great deal, or they haven't changed their code of ethics, or there haven't been substantial changes, then that agency level does not have to be done every year. We would hope that it's done within, say, every 3 years, just to reinforce it. But unless there's been substantial changes, it does not have to be done annually.
All right, thank you. Keith and Bob, let me come back to you, and we'll make this the last question. I think we got through all of the questions in the queue. But you guys see a lot of clients, have a lot of clients around the country. Obviously, internal controls is a big part of what you all do. Just generally, what are some of the biggest challenges you see to implementing ERM strategies?
Yeah, I would say a lot of folks look at this as a pretty onerous task, and I think breaking it down into simpler components and doing a lot of what Commonwealth of Pennsylvania or Virginia have done in starting with a plan and executing on that plan and breaking it down into as small pieces as you need to get started and get going. But I think people can be a little bit overwhelmed by the magnitude of trying to implement or absorb this all at once. I think most state and local governments are already well down this road, and they've already begun to do that. But they're across a spectrum of how mature they are in adopting technologies and upgrading and updating their processes for documenting, measuring, testing against their internal control procedures. So recognize where you are in that spectrum and get some advice from experts. Continue to talk to great people like David and Jeff who have been there, done that, so to speak, and that will help you kind of take it to the next level for your organization.
Yeah, good answer. Bob, anything else?
Yeah, it's like any other large technology project in government. There's certain things you have to do. You need a general ledger, and there's certain things that you could do better with a newer system. But unless there's the will to do it or a specific situation that causes it to be done, it's just harder to get off the ground. So when we were talking before about how much money we save, well, there's direct savings like Pennsylvania will ultimately document. But then how do you say we saved $100,000 because somebody committed fraud last year but didn't do it this year because we had controls in place, right? Mm-hmm. So it's just once it's justified, I think it pays off. But in an era of scarce budgets like are basically the new normal today, it's so hard to get through. But it pays off in the end. But yeah.
That's good advice. Thank you, Bob. Well, let's go ahead and wrap up. We are at the appointed hour, and that concludes our webinar on establishing risk management and controls for state government. I'd like to thank all of our speakers. I thought everybody did an outstanding job, and Bob, Keith, David, and Jeff, thank you very much for sharing your knowledge and your experiences with us today. Those are always so valuable. Also, many thanks to Anna Peniston of our staff here at NASACT who helped make today's event possible. And before we go, we need to, as you can see on your screen now, we need to confirm attendance for individual participants one more time. Again, this is just for individuals and for those that need CPE. If you would, type in and send the following text in the questions box, simply, I have completed the webinar. And once you've typed that in, just make sure you hit the send button after you've typed it in so that we do have your attendance recorded. Now, this does not apply to groups, and we've got several groups with us today. Your attendance will be confirmed by your room monitor. And just as a reminder, for those of you claiming CPE for today's training event, please don't forget to complete and mail your CPE forms as well as the sign-in sheet to NASACT. The mailing address is listed at the bottom of the sign-in sheet. And for those in group settings, please don't forget to have your room monitor sign the sign-in sheet attesting to everyone's attendance today. And one last thing, we are using an electronic evaluation form today in an effort to make our processes more efficient. Room monitors, please make sure you provide the link to the evaluation form to everyone in your group. And those participating as individuals, you should have received the evaluation form, the link to that form directly. Hope everybody enjoyed today's webinar, found it to be an effective way to obtain training in today's continued economic times. Just very quickly, in terms of future webinars, we are having at NASACT, our next webinar is scheduled for March 26th. We will be having the topic Visualizing Fraud Patterns. And if you're interested in that, you can get more details at our website, which is www.nasact.org. We're also working on a webinar. We don't have it finalized just yet, but we're working on a webinar for kind of the last-minute refresher on accounting and auditing of GASB's new pension standards. Most of you know that 67 was effective last year. The employer has to implement 68 this year, so we want to address kind of a last-minute refresher on the accounting and then get some ideas on how governments are going about the auditing aspect. So we'll get more details to you as soon as we can get that finalized. Association of Local Government Auditors, March 10th, they're having a webinar on taking the mystery out of counting CPE. If you're interested in that topic, ALGA's website is www.algaonline, that's A-L-G-A-A, L-A-G-A online, all one word, .org. And lastly, our colleagues at the Association of Government Accountants, AGA, is having a webinar on March the 4th entitled Internal Control Challenges Over Grants and Benefit Programs. Again, if you're interested in that, you can visit AGA's website, which is www.agacgfm.org. I think that's it. I want to thank everybody. Thanks again to our speakers, and thank you to the audience for your great questions, and I hope everyone has a great afternoon. Thank you.